Good afternoon, everyone. It is December 19th, 2015. This is the Option Don, and I'd like to do some coverage on the S&P 500. Just as a reminder, next week is a short week. We have Monday, Tuesday, Wednesday, full trading sessions. Thursday, Christmas Eve, market closes at 1 p.m. And Friday, Christmas Day, the market is closed. So, wow, it certainly has been a wild and crazy week, to say the least. Last week we had closed around 201. I thought that the market would, coming into this week, the market would retest 200, and if in fact the Fed raised the interest rates by anywhere from 25 to 50 basis points, we would get a rally as high as 209s. The rally got to 208.48. It peaked and then just collapsed on Thursday and Friday, very fast. And to be honest, the market closed at the 200 level, key level, 200 on the SPY or 2000 on the SPX. The SPX closed at 2005. But the ES closed at below 1998, which that was my key level for potential bullish bounce behavior. So we got to see how things open on Sunday night. But I just want to start off. Before I get into patterns, I just like to go into just a quick volume analysis on the weekly. Last week we had a strong reversal on above average volume. This week we had continuation follow through on increasing volume. The question is, what happens next week? Next week is a holiday week. We have 3.5 trading sessions, and basically, historically, it's thinly traded. I can't imagine that the market is going to be very high volume, but just based on historicals. But considering the high volume and extreme selling pressure that took place this week, there is the possibility that there's follow through into next week, and that we come back down and test 195. That's a possibility. I'm not saying that's going to happen. But I will say that they did not make it easy closing the market at 200, because this is a level where the market can bounce. And this is the second retest at 200 this week. So that's just to keep that in mind. So anyway, let me just get into some of these patterns. Right here on the weekly, we have what looks like an unconventional head and shoulders pattern. It's tilted to the left. It's not the cleanest look. Usually a head and shoulders pattern is on a flat plane, and but assuming this is assuming this plays out like a traditional head and shoulders pattern, we would see a 9-point move from the neckline that would complete at 195. This megaphone pattern here looks like it would complete at 195. What's important to note is that this ascending trend line, this rising support, has held. It's held on 2 occasions right now. Next week would be potentially the 3rd occasion. We'll see if it can test it based on the strong selling pressure, if it is going to continue. So if it does continue, then I would think that this support would be respected. So let's just say we do fill that gap at 195. I think that we'd get a hard snapback above this. It would now become resistance, but I think that it would get above it. Guys, there's also a gap wide open at 205. You can't see it on the weekly, but on the daily view you can. I'd be more inclined to play for the 205 gap. I think that there's a strong possibility that there's buyers at 200, and that there's a possibility this ascending trend line will hold. So, that's just that's just what I'm thinking. It's possible we start the week just crash down into 195 and then, you know, stabilize and come back up. But I think that just personally, my view is that um, the downside case is limited. I think in the near term, the downside case is limited to 195, and the upside case looks more interesting. It's very clear that we have not made new highs. We have failed to break through this resistance, this descending trend line from the highs. Every time we come back up, we get rejected at this resistance. So clearly there's heavy overhead supply, but you know, just from a pattern analysis and where we stand right now, assuming this ascending trend line does hold, and we do have a hard resistance here at the all-time highs, we are forming an ascending triangle, which is bullish in nature, but we do have to respect the fact that there is a lot of overhead supply at this trend line, and that there's a good chance that if we do, you know, fill the gap at 205 and, you know, just kind of churn in this area, there's a good possibility that we'll get rejected at this trend line. But until we break above this trend line, the market looks sideways to me. Once we break above this trend line, if it happens, I have a much more bullish thesis going forward. This is my market forecast through 2017. So basically, I'm looking at the next 2 years, what I could see as possibilities. You know, I am a day trader and a short-term swing trader, and I plan to trade through all of this action. But you know, for guys that have longer-term views that are forecasting, you know, just a massive sell-off in 2016. You know, there were signs that it could happen earlier. Right now, the way that I view it is I think that's naive thinking. And why do I say that? Let's zoom out. Clearly, we've had since the 2008 collapse into 2009, we've had a 6-year bull run, strong trend. Now the trend is in question. You know, it's breaking down, and it doesn't mean that after 6 years that if we do have some bearish and sideways type behavior, that it just, you know, over the next couple in a couple months that the market is going to collapse, and then through next year it does collapse. That's a possibility. I'm not going to say it. I mean, I do enjoy trading the downside, and I plan to do it. But you know, as things stand right now, I see the downside possibilities as less of an interesting situation in terms of risk-reward perspective. I think that you know, 195, that, you know, it should happen. You know, it could happen. I don't know if it's going to happen next week. You know, next week is Christmas week. Is there going to be a Santa Claus rally? I don't know. But my guess is that we trade in this zone, and that 2,200 gets respected. And then starting, you know, basically, if this is a true Head and Shoulders, that, you know, it's possible that we come back up to the neckline. And then we respect this descending trend line, and then, you know, that crash down to 195 or potentially down to 181 could happen the first week of January. Could. But, you know, right now I'm just going to respect the data that's in front of me and form a thesis of what looks most interesting in the near term and in the longer term. So, near term, I see sideways behavior. Gap at 205, gap at 195. I think both get filled. Timing, I'm going to have to zoom in. The timing stuff I'm going to cover with my members. But just a long-term view I'd like to present to everyone. So again, this right now we have the breakage, potential breakage, first signs of downside off of a long-term uptrend that after QE ended in 2014, October 2014, we had sideways action into 2015, throughout 2015, and then spring and summer of 2015, which I had forecasted in previous videos, we would see a massive downside effect, which we got, and we formed a double bottom here. Essentially, it's still from a bigger picture, it's still bullish in nature, double bottom and then higher lows until we break this support here. The market still shows bullish posture. So, many can argue with me. I do think that it's going to be difficult to break through this descending trend line and resistance, but once we do, I think that there's a good possibility we do maybe get rejected at the all-time high and come back down and test this resistance that would then become support and then just break right through. So what I am seeing is a potential left shoulder on the bigger time frames. I'm on a weekly chart. What needs to be determined is whether this left shoulder, if it's completed, if the neckline is going to be at 200 or if it's going to be at 195. So I certainly hope it's at 195 because I think 195 gets bought back up. But bigger picture, I think that the opportunity to the upside does look interesting, and that someone asked me about long dated puts, leaps, buying 2017 puts here, or around here, asking me when, and honestly, it's not my style. I trade short term. I'm an active trader. I trade through all of this crazy volatility, but buying the 2000, buying the leaps now for anticipating for the collapse in 2017. I don't know. I don't know if that's going to be a good investment or trade, because I still think it's very possible there's more upside in the market. So I wouldn't want to be speculating heavily on the downside just yet. Short term, sure. Let's see if this 195 gap can fill. But I think given the long-term trend, it's very possible that it's not over, and that these are just higher lows, and that we continue up. So, we did raise the interest rates. Last time we raised interest rates was in 2004. It was followed by a low volatility environment, from what I hear. It looks like on the charts, the 2004 to 2006 traded sideways, and then going into the 2007 housing bubble, the market just went ballistic to the upside. So let's see if this trend line can hold. I think, again, the risk reward to the upside is much more interesting than betting on the downside and thinking that the massive pullback and meltdown in the market happens in the beginning, first quarter of 2016. That's just naive, to say the least. So look, we're at an inflection point in the market, and it's important that you keep an eye on these levels, 200 and 195 on the SPY. It's super important, and you keep an eye on this ascending trend line, because if it holds, it just builds more and more reason for the upside case. I think that projecting forward into the future, if this is potentially a left shoulder, and the neckline holds, whether the neckline is at 200 or 195, there's a good opportunity to trade it up to build a head. And that we might not see a turn in the market until the end of 2016, when we have a presidential election. And so I mean, my projection for, assuming it all plays out like this is deep into the future, but my thinking is that the bull is not done. It's not done, and we can push higher. The sky's the limit right now. Right now, the market is getting oversold, building more and more reasons to go long. Sure, it could fall out a little more, but what's a little bit of downside if you have a whole lot more upside into the future. So it's just how I'm seeing it. Of course, we do have major resistances that need to be broken to the upside, but the possibilities are interesting. For either we trade sideways through 2016, or these patterns play out. This ascending triangle plays out, and we rip to the upside, make new highs, and then you can anticipate volatility. But I mean, I wouldn't think. I think somewhere in the realm of summer to winter, summer to fall to winter of 2016 is where we get a turn in the market. New presidency, a lot of political changes. The economic spectrum could be different then. I don't know. I too far ahead for my trading. But it's always fun and interesting to look at these things. So my forecast is that the bull market is not over, and that we do see highs as high as, let's call it, 2020 to 2040 on the SPY, S&P 500 ETF. I think a turn in the market could happen at the end. Let's say last 2 quarters of 2016, and hard selling pressure into 2017, which would essentially stop and pause at the neckline. These are straight lines, so it's hard to make these forecasts, but again, I'm having a good time doing it. So 2017, we complete a head, and we basically get a bounce off the neckline, and get a retest at these, let's call it the highs of 2015. Let's just say that the right shoulder peak would be between 211 and 213, and then a retest of the neckline and a sharp move lower that measures down to 150. So that's how I see it, guys. I mean, I think this whole World War III contagion meltdown, this is 2017's business. It's not 2015, 2016. That's just the way I see it. So we'll see how it plays out. My blog is open. All the short-term moves and, strategic planning for for options and futures trading. I'll provide to my members in my chat room, and I post charts and analysis on a daily basis. So if you're interested, please join me. It's theoptiondon.com, and I hope everyone's having an excellent weekend and happy holidays. It's certainly going to be an interesting trading week, even though it's a short week, but it should certainly be interesting. Again, the market could surprise you this week, so just be ready. Take care, guys.